Now, Bernard, when we take a look at how the ringgit has performed, the worst performer in Asia over the last 3 months, what's the implication of a depreciating currency for Malaysia Inc.?
I think if you look at the ringgit, Malaysia is essentially an export-driven economy, and therefore, a weaker ringgit or rather a stronger dollar will actually benefit some of the exporters. So we are actually quite positive, of the boost that it will give to the earnings for companies that are in the technology space, as well as in the glove manufacturing space, because predominantly sales are mostly denominated in the dollars.
Okay, so we'll take a look at sectors, those that are more exposed to foreign currency in terms of earnings potential, they'll fare a little bit better this season.
Yeah, but on the flip side, companies which borrow significantly in US dollars will definitely feel the adverse impact of the stronger dollars. In our view, airlines are likely to be the most affected by the stronger dollars, given that significant portions of the borrowings are denominated in the dollar.
Yeah, and tumbling oil prices, of course, being a theme. We are in the midst of earnings season here in Malaysia, and we expect some type of impact on fourth quarter earnings for these companies. But what's the kind of performance you're looking at for the last quarter?
Well, if you look at the performance of the Malaysian corporates in terms of earnings for the good part of 2014, it has been rather disappointing. For various reasons, the crude palm oil prices have been falling. And we're also seeing the earnings performance of a lot of banks have also been quite disappointing because of a slower loans growth and NIMs compressions contributing to the issue. For the fourth quarter, of course, we were seeing some softness in the oil and gas stocks, definitely, the plantation stocks as well. But on the other hand, we expect quite a bit of a bumper profits for those in the technology space that I mentioned earlier.
Yeah. Any particular subsector within the technology space that's looking interesting?
I think those that are actually producing chips that cater to the new demands like smartphones, tablets, those are the ones that are really going to see not only the effect of a stronger dollar, but the demand for these kind of products is also better than the traditional products.
Okay, and we're taking a look at the last quarter. Of course, GDP numbers coming out surprising analysts, up 5.8%, but this is an indication of how 2015 is going to be.
I think we're still quite cautious on 2015 outlook, given the fact that we expect domestic consumption is going to be going to soften. You're right, the fourth quarter numbers, insofar as the private consumption is concerned, is a major surprise to us. But if you look at the consumer sentiment index, it's a great indicator of the future consumptions in the months ahead, and it's actually below the 100 points parity. And if you look at some of the consumer stocks that we cover, they have actually been reporting quite dismal earnings. Same-store sales growth of retailers, F&B outlets have been quite stagnant. And they also suffering from margin compressions because of cost escalations that cannot be passed on to consumers. So I think going into 2015, with the implementation of GST in April 2015, I think the consumer will further feel the pinch from these cost escalations, and definitely will dampen the consumption pattern.
All right, so it looks like tech is where it's going to be in this next year, according to your analysis there. But thank you so much, Bernard Ching, who's the head of research at Alliance DBS, for joining us at the studio today. And